Hello everyone, welcome to another lovely episode with JayFx House. On today's episode, we are continuing our class on the Wyckoff mentorship. On the previous class, which was the Wyckoff episode 3, I taught you guys about the distribution and its phases with the relationship it has with the redistribution, and we had a little dance. And so you don't get them confused and how you can actually use them. Because one thing with the Wyckoff method is that it's a very, very powerful tool which you can use to understand the market. But at the same time, it also helps you to get clearance into the phases you might be in the market and what the market is doing. So you have to have a fundamental understanding of what's going on so you can easily implement these stuffs in your own personal methods. Okay, so it's not all about drawing patterns, it's the concept. So you can have the concept in your head and you're not familiar with how to spot a Wyckoff pattern, all this kind of stuff. But at the same time, you are actually familiar with the concept of Wyckoff. So when you're not using your smart money concept or your SNR or your Wyckoff, so your Elliott wave or your support and resistance, you can also simply identify the concepts adding to your own method of pattern, which you use on technical charts, and that could help you a lot. So the Wyckoff is a concept, not just a pattern. And this concept goes deep into explaining price action and the movements of candlestick in such a sophisticated manner. Okay, so I'm going to be breaking down why we have these phases and how many types of accumulation we have, how many types of distribution we have, and how many types of reaccumulation and redistribution. Okay, so at the same time, we had this analysis within the community last week. I shared this before it played out. And if you're not in the community, you can easily join us using the Telegram link, which is in the description. Here we go. I shared it on September the 11th. You can see the analysis breakdown. This was before the playout we have on the chart. So this was the analysis, and on the chart is the results 1 week later. So you can see Wyckoff is a very powerful tool. This is different from the analysis we had on the episode 3. Okay, so it was the same week I shared episode 3, I shared this analysis, and now you can see how beautiful the result has turned out to be. So we can actually use this method of trading to identify certain concepts even before we get to the stage of identifying it at this level, which I'm doing right now. The concept is something we can use in our own strategy and also make trading more logical. Okay, so first of all, you have to make trading logical for you to be able to make money from it. That's one fact. If you're trading based on instincts, at one day, you're going to run out of instincts, and because you don't have a logical backup to back up your sense of support and resistance, you're going to lose your touch, which would lead to a lot of losses and then probably bringing you back to the beginning, which is not where anybody wants to go to because you don't get your time back. Okay, so you can sacrifice that time now and learn. So later you don't get to regret coming back to the beginning while you have no time again to study. So please, let's take these classes seriously and actually implement them practically, not just watch them. Try to identify them. This is the major reason why we have a community where you can share your results and your analysis. Everybody's supportive and everybody tries to elevate the next person to the next level. So if you really want to take your trading to the next level and also see people support you in your analysis, you can join the community in the description. Okay, so let's move over to the ebook. The ebook is available also within the Telegram channel of the community and it's pinned. So you can easily just go to the community, head to the pinned messages, and then you get the link that will take you to the ebook. It's free, completely free. And yeah, that's that. So this is page 43, where I gave a little insight about the redistribution. What we had earlier here. If you look at this, you'll find that I circled the distribution and the redistribution with a green. This is because you have to understand that there's a relationship actually between these two, but this is the counterpart of a distribution. Okay, so the accumulation is the counterpart of the distribution, but the distribution and the redistribution has a relationship that keeps them in the same, lane. Also, the same goes for the accumulation and the reaccumulation, but you spot them in different phases. Now, coming back to supply and demand, if you're familiar with supply and demand laws, not just the identifications on technical analysis, you will know that we have something we call the rally-based rally, the drop-based drop. We have the rally-based drop and the drop-based drop. But this is not a new term, right? So if you're new to trading, it's probably because you haven't, maybe come across this information yet. But if you're old to trading, you probably have heard about it somewhere, but maybe didn't give that much attention to it. It's important because it identifies a means of supply and demand that also gives us understanding of how many ways a trend could happen. As we all know, a trend can either be bullish or bearish, right? But at the same time, how do you know a turning point? And what are the criteria of a turning point of a trend? So this means we have also another part of a trend, which is known as the reversal point. Okay. And how do you know a trend is about to continue, but in a retracement level? So this means we also have this consolidation, which happens not at a reversal point, but instead a continuation level, probably a retracement on a lower time frame. So if you look at this, if you want to spot an area of interest or you want to get in on an entry, you can actually get in on two major types of markets, either in a continuation trend, sorry, either in a continuation trend or in a reversal trend. In a continuation trend, you are looking at a reaccumulation and a redistribution. Okay. In a reversal trend, you are looking for an accumulation or a distribution. All right, so you see where this comes in on, let me repeat that again. If you're getting in on the market, and the first thing you have to pay conscious of is market structure, is the most important thing. All this we are saying is trying to understand what market structure is saying. So market structure is key. The trend is your friend. If you can write that down, write it down. Market structure is key. The trend is your friend. So once you open your chart, the first thing you should do is go and look for your allies, which is market structure and the trend. So the trend is your friend, which would help you to win for the day, while market structure is the key to your victory. So if you want to win when you're trading, you should always know the market structure, or you're probably in a position where you're lost. Okay, you're lost. No matter your analysis or whatever you might be looking at, you could be looking at an area of interest with high possibilities, and it could just be a trap based on market structure. Maybe this is a weak high. And then for that mistake, you pay a big price. Okay, so market structure is key and the trend is your friend. Now, with that being said, we look for an accumulation and a distribution around a reversal point, while we look for a reaccumulation and a redistribution around a continuation point. And the difference, or we can say what brings in accumulation and distribution on a reversal point, what is the difference between the both of them? Okay, so we know we can either be in a bearish trend, which is heading into a bullish trend, okay, or we can be in a bullish trend that is heading into a bearish trend, right? So we can be in two kinds of reversal points. Or let's say there are two types of reversal points. There's the bullish to bearish, which is this one. And there is the bearish to bullish, which is this one. All this is basically what the market circle of Wyckoff is trying to explain. So in the ebook, I explained about market circle of Wyckoff. We have the uh, accumulation, the markup, the distribution, and the markdown. So if you look at this, you're looking at something like a markdown, an accumulation, a markup, a distribution, then a markdown. You see, so this is basically the concepts behind the market circle of Wyckoff. So the origin of the schematic comes from the laws and the principles of these concepts. And if you know these concepts, it helps you a lot to understand the market structure, supply and demand, and also at the end of this mentorship, you should be able to make use of Wyckoff in whatever strategy you're using, be it smart money concepts or S&R. All right. So I've been seeing most of the guys ask for support and resistance classes, sorry. And I've been looking at that maybe in October or coming November, I'll share series on my way and my understanding of, the S&R strategy. So for now, we'll focus more on the Wyckoff and see how we can break this down to a more understandable scale. You can find these teachings everywhere, not just here, okay? The only thing you're finding here is just my way of teaching it and my own concepts, my own breakdown, So you can learn this in every other places. I'm not making it up. You can go look it up. This is the concept of Wyckoff, and this is just me explaining how you can use it from my own perspective for educational purposes, okay? I just hope this is sinking in because it's very nice. Wyckoff is a very, very logical concept to trade with, especially when you have the insights on how to use it. Okay, it gives you a lot of insights to what the market has been doing. And this is kind of like an institutional strategy for a very, very long time. Right. So the concept was introduced way, way long ago, even before the advancement of technology to this level. All right. So that means it's a very, very, useful concept, whichever way you want to use it. And understanding this accumulation and the reaccumulation schematic now, what is the relationship between the accumulation, the reaccumulation, and the distribution with the redistribution? Because I just explained the meaning and the relationship between them on individual levels. So the accumulation and distribution, I just explained their relationship to you, which is reversal. The reaccumulation and the redistribution, I explained their relationship to you, which is continuation patterns on different trends, okay? These guys, the distribution are happening in trends reversing to the bearish side, while the redistribution are happening where trends are continuing in the bearish direction. So they are both bearish guys. Why these guys are both bullish guys? The accumulation happens where trend is going to the bullish side. The accumulation happens where trend is still in the direction of the bullish side. Now, the accumulation traditionally has over three different schematics, which is also available in the ebook. We have the accumulation 1, accumulation 2, and accumulation 3. I don't know if there's accumulation 4 or that, but I just know these 3 accumulations. There's also a distribution 1, distribution 2, distribution 3, and so on. So it's going to get a little bit complex from here. This is why I'm trying to explain the beginning to you. So as we go further into this, you don't get confused. So please, if you're getting confused, you don't understand some of the things I'm trying to say, just watch the recording again, especially this episode, and you would understand what the accumulation 1 is. Maybe when you see somebody saying, this is an accumulation 1, not an accumulation 2, or why there's a 1 and 2, and the difference between a 1 and 2, how you can identify a 1 and 2, and how, don't mind what I'm doing on the screen, please. I don't know why. For some reason, they refuse to, okay. So this is going to basically give you insights to what's the difference between 1 and 2, why there's a 1 and 2, and how do you spot a 1 and 2 if you're supposed to be looking for them at the same places, because The accumulation 1 and accumulation 2, accumulation 3 are all reversal patterns. Okay, they are all accumulations. That's one they're having. But they all have their own difference, which those uniqueness are why they are separated to 1, 2, and 3. Same goes for the distribution. They are all found in reversal turnovers as well, bearish turnovers. But the 1, 2, and 3 also have their own difference, why they are called 1, 2, and 3. And these guys also have their 1, 2, and 3. All these are available within the ebook. Okay, I clearly stated them with their diagrams um, as best as I could find on the internet, and I gave it a very, very clear breakdown as well in English. So you can go have the ebook so you can watch it, read, and also understand how to use this method properly before you risk your money on any technical method in trading. So please go and learn something, before your instincts starts to fail you and you start losing money in Forex. So now, sorry about that. Now, what's the accumulation 1, 2, and 3? What's their difference? They're not much, okay? They're not major difference between them, but I'm pretty sure if you understand the difference, you would also eliminate some of the mistakes we could have when identifying this schematic. So as you can see over here on the ebook, I gave diagram of all of them. This is an accumulation 1, while this is an accumulation 2. Okay, so if you look at the accumulation 1 and you look at the accumulation 2, you would see that there's a difference within the spring. This accumulation 2 doesn't have a spring. Accumulation 1 does. So you see, so this is trying to give us an information that even when you're looking for Wyckoff, when you're trying to look for Wyckoff schematics and you don't get a spring that clears out this, is actually still valid as an accumulation. That's probably an accumulation 2 forming up. So you don't always get a spring, which the spring is a manipulation that breaks structure, but returns back into the range. We talked about that in episode 1. And you might actually get a retest of a supply zone instead, which is last point of supply. Yeah, I know there's another point, but that's what this means. And that right price to the initial directions of the changeover from the reversal point. So you have to be aware of these things so you don't neglect yourself or think you are bad after you start looking for these schematics, and then probably you get missed out on your spring or something is different. No, there are different types of accumulation, and you can actually have different models playing out in the algorithm. So there's an accumulation 3, like I said, and this is how it looks. So you can get the ebook. The link is in the description. Take your time to study these schematics and their difference. So this is also another means which the accumulation can form that is different from the traditional accumulation 1 and 2. All right. So, and the meanings of these terms, which I explained in episode 1 and 2, are available in the ebook as well. So you can go and learn these terms, which episode 2 talked about the meaning of these phases. So comparing with the phases, which I taught you guys earlier, you can use it to understand the phases within this, because honestly, these are just different patterns of the concepts. It's still the same thing. If you look, the turnover happened from this point. This was the structure. And then at some point, the structure went bullish. Okay, so this is why market structure is key. The trend is changing. The trend is your friend, but it's going to change if it wants to change. That's why it's your friend. If you know what the trend is doing through market structure, which is the key to that friendship, you're kind of safe. As you can see, these identify swing areas. We have done multiple sections on smart money concepts, and in those sections, I was busy teaching you guys about liquidity, swing points, and all this because they are important in understanding Wyckoff as well. As you can see, this is liquidity, supply zone, break of structure. And then probably within this structure, the same thing is happening. So if you're familiar with um, smart money concepts, using Wyckoff is going to be a lot easier for you. As you can see, break of structure, a retest, price guides to break, didn't break structure yet, but tested the resistance level and then returned to test a supply zone when clearing out liquidity. So you see, it's not that complex. It's not that complex when you look at it, and then you're seeing, because um the earlier picture looks like this, you feel like this is going to be a very, very, very difficult thing to find. No, remember the two most important thing: your trend, which is your friend. Remember, an accumulation happens in a reversal point. So this has to be a reversal point. All right. So this, you identify your trend, which is your friend, and then you look for the key, which is the structures that helps you to tell what's going on within it. Now, then you know the meaning of these terms, and then you pay attention to the support and resistance level, and voila, you're using Wyckoff. This is the concept behind Wyckoff and how you can use Wyckoff to trade. So after this, we have the accumulation 4. I told you there are so many other ones as well, but you can then study, and then from your experience, you learn how to use these guys. But the same thing is still within it. It's just market structure, but a more complex market structure. Okay. So we then have the distribution 1, 2, 3 as well. But the distribution, which while we were studying distribution, we made clearly that this distribution is, the bullish guys turning to bearish. So once you identify your friend, which is the trend, you look for the structure. Since it's a bullish structure, obviously higher highs, lower highs, higher highs, lower highs. Then we have a change of character, and then there's lower low, lower highs, lower low. So when you see a small structure like this, it doesn't look like this, you're seeing it slowly, is because they're telling you that this is an internal structure. On this bigger scale, where you're seeing bigger structures getting broken, those are external structures. I have videos on internal and external structures as well. Those are there to educate you on how the concept works. But as you can see, Wyckoff obviously use a lot of internal and external structure to explain their schematics. So you have to know what is internal and external structures so you can optimize this method properly. So as you can see, a reversal point as well, and then the schematic is explained. So we have the distribution 1, distribution 2, 3, 4, and so forth. Then we have the reaccumulations. So this is the distribution 4. This is the accumulation. So the reaccumulation, if you recall what I explained earlier about it, I told you it's a bullish trend, not a reversal point anymore, because we are now on a rally-based rally. Rally-based rally. You see, it's not a C anymore, it's not a Coven, it's the rally-based rally. So on the rally-based rally, which is the bullish trend, is going to be a reaccumulation. Okay, so this is a big one, just one big trend on a complex scale. So once you identify the trend, which is your friend, you then pay attention to identifying the key areas, which are the swing points that starts the structure. On the episode 5, we break down using the reaccumulation. Okay, so I've not taught you guys mainly about how the reaccumulation works, but this is the introduction to the accumulation and the reaccumulation. So we are going to have more episodes, episode 5, 6, and 7, where we break down more about the schematics and how to use them, the meaning of this stuff. And then there are terms like the crack, the shakeouts, which are not official terms used on Wyckoff, like the AR, the ST, and the buying climax. And those terms would also be explained on a different episode. So we are taking it slowly so we can easily comprehend how this concept work and then use it in our own various strategies of trading. So the aim of this, the academy is trying to promote a means of trading where individuals don't have to identify as any kind of trader. For example, like ICT, I love ICT's concepts, especially when it comes to time and section, the PO3 accumulation, manipulation, and distribution concept. But at the same time, it's not necessary for you to just trade only ICT. Okay, you can probably be someone who is used to diagrams, and we are all different human beings, okay? And then you find somebody else who is used to harmonic patterns, and then because you're used to white ICT, you're then neglecting them that they might be wrong. No, no, we can clearly see ICT is different from Wyckoff. Wyckoff is different from ICT and supply and demand. Obviously, SNR is also different from Wyckoff. These concepts have their own principles which they operate on. So you don't have to choose which religion you're in. You just have to follow God, which is the trend. You understand? You're here to make money. You don't have to pick and fight over it. That's what we're trying to do here. So that's what we're trying. Because one of the big issues we are having in the trading community is trying to get along when it comes to our ideas. You find a person identifying something you're not familiar with, you start to criticize them because you're not familiar with that concept. You're like, it doesn't work. And that's not true. I showed you guys a live analysis I just made that I recently concluded, and it went exactly as I predicted. Okay, so this is from Wyckoff, and this shows that Wyckoff works. The previous episode we did, I did the same thing. I showed you an analysis I made live, which the layout was what I used to teach you guys. So this is also the same thing I'm doing here. And why this is an accumulation, as you can see, it's a C. It's happening in a reversal, not a trend base. So this was where the whole turnover happened. So on the next episode, we'll talk more about that and the accumulations relationship with the reaccumulation and how to identify the reaccumulation. Probably within the week, by the grace of God, I would identify a reaccumulation and it goes in my direction again, which I will use to break down that episode. I don't know, but if that happens, that would be great. And then we'll use that to understand more on how to identify the accumulation with live charts. So thank you for joining us today. Leave a subscribe and a like. Also share to your friends who you want to learn more about trading, and I will see you in the next episode. Thank you.